Hello friends, welcome to my channel and welcome to the another session of USA Weekly Market Report. I hope you are enjoying this specific series once in a week. Now, the good thing about US economy is the numbers and the kind of you're talking about stock market numbers, you're talking about economy numbers. They are the highest in the past 20, 30, even 35 years. So, first of all, if you are looking at this press release, you will see that the headline itself is saying that US firms beat profit estimate at a record date. And in terms of percentages, 85.5% of the companies have beaten analyst expectations for EPS. So this is a very important thing that you need to understand, because earning per share is one of those absolute numbers which will define the fundamentals and which will help the stock to move either on the upside or on the downside. Now, more specifically, as you can see, this line is saying an average of 78% company have beaten earning estimates in the past 4 quarters, but this time it has increased up to 85.5, and it would be the highest beat rate on record going back to 1994. So you can understand the kind of results US companies are showing. And what does it means is actually economy is moving at a very rapid pace, and stock market will probably hold and will move on the upside, as I've been saying for the past couple of weeks. And this is not new. I have been saying, if you're looking my old videos, I think 1 year back, I've talked about the long-term trends of S&P, Dow Jones and NASDaq, where I'm saying that the road of stock market crash is not near right now, and it will take couple of years before the actual crash comes. So we have a long road on the upside for the time being. Now, the other number which you need to look at is the US GDP growth rate, and you can see the last time the updated number is 6.4. You cannot obviously check out this number because we have a very big slump in the year 2020, and the next quarter GDP will be a very big bounce back. But last time it came at 6.4, and the expectation is this time it will be near 7%. So a developed economy and a big giant like US, if grown by 7%, then it will be a very big number. So there are some very important things that are going on, and most importantly, if you have seen the results of Google, Apple, Amazon, if these companies can grow their revenue by 30 or 40%, so you can understand the kind of things that are going on. Okay, so there are some very big things and very positive things that are going on in the stock market, in the economy, beg your pardon, that will have their positive impact on the stock market. So talking to the chart, the first thing that we are going to look this time is the dollar chart. And recently the dollar has started moving on the upside after hitting the low of 90.61, currently quoting at 91.34. But moreover, if you are looking at the dollar chart, you will see that the chart has been moving in between a range. So on the downside, you have your support at 89 and 88.29. On the upside, you have 103. So the dollar index, even in weekly chart, has been moving in a range. Let's see how it will move going forward, because one thing you need to understand: if you keep the economy running like this, you cannot pull off the triggers. That is the first thing. Second thing, although US economy or most of the parts of US economy has been recovered, but the risk persists even today, because this time the virus is showing mutations. So we need to see that at least in US economy, COVID will not strike back. So that's one of the big things that you need to look at. Now, before going to another chart, I would like to draw your attention, and this is the chart of Google or Alphabet, as you know. And one thing you must understand, because this is one of those companies which will tell you where the stock market is currently moving. That's what at least I think, because you have everything in terms of data, in terms of sentiment, in terms of human emotion. Everything has been captured in Google. So if economy is happy, anyhow, if economy is happy or sad, it will be on the Google's front. And if you can see how the stock is moving, and it has made some newer highs and already made a breakout. So this is what the chart is showing, that we have a positive trends on the upside. So whether you believe it or not, that's a different thing, but that's what companies are showing. Okay, so what I think is we need to look at the chart of Nasdaq. And Nasdaq, anyhow, I've talked about the long-term chart or the trend, but even though I've talked about that, I think 1 year back. Let me draw this chart again in front of you, and let me tell you how the chart is moving or how the trend is performing for you. Now, in the long-term chart, there is still very big upside which is yet to be seen, and that's why I've been saying that we are not in a situation where you can call a big sell-off, because the long-term trend is positive and the highest level is yet to be seen, and this is pretty much visible on the Nasdaq chart. So the big target that we are looking at in Nasdaq, and it will be in between 24,000 and 28,000. So this is what at least I am expecting this Nasdaq index will see before we can see a big sharp decline which we had seen in the year 2000. Now if you look at the short term chart of Nasdaq, so let me go to the 15 minutes chart, you will see how this chart is moving in the short run. And here we have, so recently the stock has made a double bottom like this, you can see the W. Okay, and if I just zoom this trend for you, what you can see here, this is what you can see in terms of downside, right? And in terms of upside, you have something like this. And I think this is the mid level that you need to look at in terms of support. Okay, and the index itself is taking support at this level, which is 13,955, and you have your next support at 13,847. But what I am looking at is this zone, which is 14,200. Okay, once the index move above 14,200, you will see the risk on trade will be back on the table, and whatever you have seen in the month uh, or from the month of October till January or February 2001 will back again, and lots of different stock will move sharply on the upside. That's what is yet to be seen, right? Now, this is the another chart which we need to look at, and this is a US 10-year bond yield. Now, let me draw the trend line for you, and you can see how the interest rate chart for. So, this is how you can see the interest rate chart been moving for US 10-year yield. Now, what you have in terms of support is 1.45, and on the higher side you have a range which will be in between 2 and 2.2. Now because this has already moved toward the higher end of the range, and if it doesn't move or crawl back again above 1.69, then you will have 1.45 on the table. So this is what we are looking at in terms of the 10-year bond yield chart. So there are some good indications that you can see across the economy, and that's why it is obvious to think that we will have a big as well as a sharp trend on the upside rather than on the downside. And moreover, when your frontline companies which are not only big in US but across the globe, when they can move by 40%, and those massive giants have $1 trillion market caps, so moving 40% in terms of growth, you can understand the kind of money they are generating. So you have fundamentals reason to think that the stock market will move on the upside. So it's time to be rather optimistic, and don't think about all those pessimism, because stock market will always rise that wall of worry. So with this optimistic note, this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.